Hey everyone, welcome back to Corporate Decoder, the place where let's just say we're about to uncover if Acushnet is truly driving for success or just putting on a good show. Acushnet, the name behind those golf clubs you love, has just dropped their latest report and we're going to break down what it really means for their bottom line and your potential golf game. If you appreciate getting straight insights from corporate documents, make sure you are subscribed and join our Discord community linked in the description below for more in-depth discussions. This report we are looking at is a standard filing from Acushnet Holdings Corporation, providing an update on their recent performance. Think of it as a postcard from the company telling us how they are doing, specifically focusing on their financial results. The date here is the 5th of November 2025, and this report covers their performance up to the end of September 2025. So we're getting a look at how they fared during the summer months and leading into the fall. The company itself is Acushnet Holdings Corp, which you might know better by its brands like Titleist and FootJoy. They are a big player in the golf world, making everything from balls and clubs to apparel and accessories. They are incorporated in Delaware, which is a common place for companies to set up shop legally, and their file number with the government is 001-37935. Their tax identification number is 45 to 2,644,353. Their main office is located at 333 Bridge Street in Fairhaven, Massachusetts, with the zip code 02719. You can reach them by phone at 800-225-8500, although we will not be calling them today. Their stock trades on the New York Stock Exchange under the ticker symbol GOLF. This means you can buy a piece of the company, and their common stock is what most people own when they invest in Acushnet. The really juicy part for us is this section about their results and financial condition. This is where they tell us how much money they made, how much they spent, and whether they are generally doing well or not. On the 5th of November, Acushnet released their financial results for the third quarter, which ended on the 30th of September. This press release is attached to this report, and it's the core of what we can learn today. What we are going to be looking at is the information within that press release. This press release is Exhibit 99.1. It's the main piece of information that tells the story of their recent financial journey. While there are other exhibits, this one is the key to understanding Acushnet's current health. Now, let's get to the numbers. Typically, these filings from companies like Acushnet will include detailed financial tables. While this specific filing is brief and points to an attached press release, we can infer the kind of information it contains. They would have shared their revenue for the quarter, how much profit they made, and possibly compared these numbers to the same period last year. For a company that sells golf equipment, we'd be looking for signs of strong sales, especially if it was a busy golf season. Are more people playing golf? Are they buying new gear? Are they splurging on premium items? Think about a golfer, they want the best clubs and balls to improve their game. Acushnet's success depends on their ability to provide that. If their revenue is up, it likely means people are buying more golf clubs. Balls and apparel. If their profits are up, it means they are not just selling more, but also managing their costs effectively. A big part of Warren Buffett's strategy, for example, is looking for companies that sell products people consistently need or want, and golf equipment certainly fits that bill for many enthusiasts. We would also look for trends. Are sales growing steadily year after year, or are they bouncing around? A company with consistent growth is generally a healthier company. If revenue has increased by, say, 10%, that is not just a number. It means for every 10 golf balls they sold last year, they sold 11 this year, which is a positive sign. Conversely, if revenue dropped by 5%, it could mean they are losing ground, perhaps to a competitor or due to economic slowdown affecting discretionary spending like golf gear. We would also examine their expenses. Are they spending more on marketing to reach new customers or maybe investing in new product research and development? High expenses are not always bad if they lead to future growth, but we want to see that growth materialize in their revenue and profits. The report doesn't dive deep into specific figures here, but it is safe to say the press release it references would contain the crucial details on revenue, net income, earnings per S-hair, and potentially segment performance if Acushnet breaks it down by product line like golf clubs versus golf apparel. For us as investors or observers, these numbers tell the real story. They show whether Acushnet is a well-oiled machine hitting all its targets or if it is struggling to keep up with the demands of the market. When we look at Arian Sullivan's role signing this report as Executive Vice President and Chief Financial Officer, it tells us this is a definitive financial statement from the company's leadership. Now, let's try to piece together the bigger picture based on what this filing signifies. Acushnet, being a leader in the golf industry, is sensitive to economic upturns and downturns, as well as the popularity of the sport itself. If they are reporting strong results, it suggests that golf remains a resilient and popular pastime, and Acushnet is effectively capturing that demand with its well-known brands. Their ability to maintain or grow profit margins would indicate strong brand loyalty and pricing power. They do not seem to be battling significant legal issues or major leadership shakeups. Based on this report, as the focus is primarily on operations and financial performance, one key area to watch for any company, including Acushnet, is how they manage their inventory and supply chain. In the sports equipment world, seasonal demand and new product cycles are critical. A well-managed inventory means they have enough products to sell when demand is high without being stuck with excess stock when demand cools. Looking at the filings like this helps us understand the company's strategic direction. Are they investing in new technologies, expanding into new markets, or focusing on improving their existing product lines? The financial performance detailed in their reports provides the evidence for whether these strategies are working. A consistent upward trend in their financial metrics, especially profitability, would suggest their strategic decisions are sound. In conclusion, this filing, while light on specific numbers within the 8K document itself, points to a detailed financial announcement from Acushnet. Based on its purpose, it's all about the money. We're looking for a strong sales and healthy profits, which would mean Acushnet is successfully navigating the golf market. If the press release detailed positive revenue growth and improved profitability, it suggests their products are in demand and their business is running smoothly. Any significant dips would warrant a closer look into what might be causing them, whether it is increased competition, changing consumer preferences, or operational challenges. Alright, that is Acushnet's latest financial update. What is your take on what this filing signals for the company's future? Do you think they are driving towards continued success or facing some tough holes ahead? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate filings. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.